are ready to invest in the stock market, but you are not sure which individual stocks to pick. That's where index funds come in. If you are a beginner in the investing world, this video is for you. So make sure to watch this video until the end as you learn about simple and smart ways to invest. Hey everyone, welcome back to my channel. If you're new here, hi, I'm Yana. I speak about personal finance and share creative marketing strategies. So if this is something that interests you, go ahead and subscribe to my channel and hit the notification button to be notified every time I post a new video. Before we move forward, let's first understand what is an index fund. So an index fund is like a ready-made package of investments that lets you own a little bit of many different companies without having to choose which ones to buy yourself. It's like buying a mixed bag of candies instead of picking just one. Here is how it works. Let's say you invest in an index fund that tracks the S&P 500. And the S&P 500 is an index that represents 500 of the largest publicly traded companies in the United States, which includes Apple, Amazon, Microsoft, Google, and many others. When you invest in an index fund, you're essentially buying tiny pieces or shares of all those 500 companies. So instead of trying to guess which individual stocks will do well, an index fund automatically includes a bunch of different stocks or other assets. For example, it may include shares of popular companies like Apple, Google, or Microsoft. By investing in an index fund, you're essentially buying a tiny piece of all those companies at once. If you're a beginner in investing, index funds can be a smart choice to start growing your wealth over time, because they are straightforward, low cost, and designed to help you build a solid investment portfolio. Now let's talk more in depth about the benefits of investing in index funds. Number one benefit of an index fund is that it gives you instant diversification. Diversification means spreading your investments across different companies and sectors to reduce risk. With an index fund, you're not putting all your eggs in one basket by investing in just one single stock. Instead, you're investing in a broad range of companies, which helps you lower the impact if one or few of those companies don't perform well. Another advantage of index funds is their simplicity and lower cost. They aim to replicate the performance of a specific index like the S&P 500, so there's no need to constantly buy and sell individual stocks. Plus, they often have lower fees compared to other types of funds, which means you get to keep more of the money you earn. Now let's talk about how you can start investing in index funds as a beginner. Here are a few simple steps to get you started. Step number one is open a brokerage account. To invest in index funds, you'll need to open a brokerage account. There are many online brokerage platforms available that offer user-friendly interfaces and low fees. Research different options and choose one that suits your needs. A few well-known brokerage platforms are Fidelity, Charles Schwab, Vanguard, E*TRADE, and of course many others. You just need to research and find the one that suits you best. Just a hint for your research: when choosing a brokerage account, consider factors such as account fees, investment options, customer service, and convenience. Step number two. Research index funds. Once you have your brokerage account, research different index funds available. Look for funds that match your investment goals and align with the index you want to track, such as the S&P 500 or Nasdaq. Step number three. Determine your investment amount. Decide how much money you want to invest in index funds. It's important to invest an amount you're comfortable with and won't need in the short term. Step number four. Place your investment order. Once you have selected an index fund, place your investment order through your brokerage account. You can typically do this online by specifying the amount you want to invest and the fund you want to buy. Step number five, monitor your investment. After investing in index funds, it's a good idea to time review your portfolio's performance. However, it's important to remember that index funds are designed for long-term investing, so avoid making frequent changes based on short-term market fluctuations. So to sum it up, an index fund is a convenient and easy way to invest in a mix of companies without the stress of picking individual stocks. With index funds, you can benefit from diversification, lower cost, and overall success of the companies within a specific market or sector. I hope you found this information helpful and feel more confident about this investment option. If you have any questions or want to share your thoughts, please leave them in the comments below, and don't forget to subscribe to my channel for more finance-related content. Thanks for watching.